Welcome once again, every distinguished participant. So in today's class, we'll be looking at how to use QuickBooks for a trading business. Now we'll be looking at this using an example one of us, our colleagues, shared in the group concerning a situation where she is into a business that sells or supplies a particular product, and the customer makes payments or place an order and then makes payments for some quantity of those products to be delivered. Now, while in the process, they have received the payments already, but they later figured out that what they have, that's the available quantity of that particular product they have, is not up to what the customer paid for. So she was asking that how do she handle such transactions where a customer pays excess amount or advance payment, or where a customer pays and did not receive what he actually paid for. So this is a circle, okay? And as an accountant, it's part of your duty to manage the accounting circle for an organization. And all you have to do when you're using QuickBooks is to develop, document each of those business processes or transactions involved. All right, so I'm going to show you, and we'll just keep to time to see how we'll solve that problem for a trading business. Trust me, you can apply it also. So below here, I have steps I've already written down to enable you. So QuickBooks for a trading business, okay? So what is going to happen now? We're going to go through these steps. I listed them out for you. So always know the first thing is to create your company file, which I told you your company file is that document, is that file that contains all financial records for the business. So you set it up. You also set up the chart of accounts. You also set up the preference. You set up that what we call the preference. Now you must know that the preference is what you use to manage settings in QuickBooks. In every accounting software, there's always what you use when you want to manage settings in it. When it comes to QuickBooks, it's preference. You might want to change the color. You might want to establish different kind of control settings. You use the preference or command settings, which will affect either the transaction or is going to affect how you deal with information within that data. It's just like SQL, which I teach, which SQL also has similar languages too. For example, we have the DDL, we have the DML. With the DDL, looks into the data definition language. We also have the transaction control language, and they all play different roles as far as the preference, just like the preference. So you must set up the preference. You must also set up the inventory. Okay, you must set up the inventory the business is going to sell or that they deal on is very important. And here we have what we call inventory parts. So that's what you're going to use, inventory parts. Inventory part is for businesses which sells or deals on products that they want to track the quantity, okay? Products that they want to track the quantity. That aspect has to do with the cost of goods sold account, meaning that you have to set up all that. Then we have handle transactions. How do you handle transactions here for a trading business? You'll be setting up, or you'll be using the sales order. Each time a customer places an order, you also be using your invoice. Customer places an order and says, okay, he or she wants so product. You then turn that sales order into an invoice. Then you handle transaction using sales order, using invoice. Now, when a customer makes payments, okay, when a customer makes payments, when a customer makes the sales order, the invoice, then once a customer makes payment, in such situation, what are you going to do? You're going to use what we call the receive payments to handle that. And when you receive the payment, what else do you do after receiving the payment? You can record, you receive the payment directly to your bank account, okay? And you can also handle transactions also using the general journal entry. That's the general journal entry. We also have the sales receipt, which is for immediate payments also. But all these are not the problem. What is the problem? The problem is that situation where a customer pays for an item, okay, and what was delivered to him was not up to the amount he paid. So if later on he's now paying, what do we do? How do we account for that? How do we take care of that using QuickBooks? So we're going to take care of that issue now. All right, so let's do this quickly since you now understand that very scenario. So let me change this. Number 5 is a scenario. Okay, sorry, that's preference. Let's say we have a scenario here, or like scenario analysis. So say scenario. Okay, so we have a scenario which is the main problem that led us to this, which we said, how do we handle a situation where a customer pays for an item and what was delivered to him was not up to the amount he paid? Then later, in few weeks' time, we then have the product. The product becomes available. In a few weeks' time, the product becomes available, which we intended to send the balance of the item left to the customer. So she was asking, that the question she was asking was, sir, how do we, so this was a question, how do I handle this kind of situation? In using QuickBooks. All right, so guys, I'm going to show you basically how you can handle this, okay? So you're going to trust me on that. So we're going to do this as fast as possible so we get to see how this works perfectly for you. And moving forward, you'll be able to use this. Okay, you'll be able to use this for a whole lot of things. All right, so let's go straight to our classroom. Let's go straight to our classroom. Don't forget the scenario is here. Handle a transaction where? How do I handle a transaction where? How do I handle a transaction where a customer pays for an item and what was delivered to him was not up to the amount he paid? Then in a few weeks' time, the item becomes available. The item becomes available, which I intended to send the balance of the items left to the customer. How do you or do I handle this kind of situation using QuickBooks or transaction using QuickBooks? It's easy. So let's go straight to our classroom. So every time, like I told you, you always begin by creating a company file for that business. So that's also not an exception here. So what do we do? Let's say the name of this business is Buy Better Nigeria Limited. So I'll go straight to my QuickBooks. I'll come to create a new company. Now let me use Buy Well. So I'll come straight to Express Start. The name of the company is what? You can just say Buy Wire. Okay, Buy Wire. Let me use a smart name, Good Wires. Nigeria Limited. Industry, I'm just going to use, because Quickbooks has a lot of industries, okay? But I don't want to use wholesale distribution depending on how we make that sales. Okay, let me use wholesale distribution and sales. Business type, sole proprietorship, depending on what's the business type. So once you're done with that, for country, I will always tell you to use others because Nigeria is not there. Fill in the tax identification number on the EIN spots and other information like phone number. Once you're done, come down to preview your settings. Go straight to the chart of accounts. You'll see some accounts have been highlighted. So all you're going to do for me, place and place, just tick only those accounts you know you'll be needing. Okay, like the sales account, if you'll be giving discount and all that, you're also going to create and maintain that. So all these accounts here are accounts that are suggested by QuickBooks for you. But trust me, you can decide to ignore them. So I always advise you even ignore them. You'll be the one to set up your expense like your meal and other expenses. I will show you. That's why our step here says what you must set up the chart of accounts after you've created your company file. So you make sure you create your company file, which is compulsory. After that, you then look into, you create your company file then before you set up the chart of accounts. So to complete this aspect of creating your company file, just tick on this box here, untick it. So don't select what QuickBooks provides. So that you create yours in order to avoid confusion. So once you're done, click on create company. So that's just how to create your company file for that very trading business, Good Wires Nigeria Limited. So I believe number one objective, that aspect have been achieved. So let's wait for the company file to load up so we can continue. Okay. This account, such type of business. Okay, so as I was saying, that after you've created your company file, the next thing you have to do is to set up the chart of accounts for that trading business. Now, the chart of account is the backbone of the accounting software. Now, what I mean by backbone is because it is what the accounting software relies on. Okay, the reason is because we have an accounting process, we have an accounting cycle, which you are to manage. And that accounting cycle and process have to be set up first through this chart of accounts. So it's in the chart of account, you will go down to set up all listed accounts for this trading business. And you must know also that the chart of account is part of the basic information which you must set up. The reason is because if you get your chart of account set up wrong, it is going to affect all your transactions which you'll be posting using QuickBooks or recording using QuickBooks. So you must make sure that you set up proper accounts to keep track of the whole business and processes for that very Good Wires Nigeria Limited. So the chart of account is also based on 5 elements of the financial statements, which according to IS2, IS1, which talks about presentation of financial statements. Of course, you know that definitely when you're looking at the financial statement aspect, which has to do with reporting, which is the end point of an accounting process, you know that every account you're working here is either going to be an asset, it's either going to be a liability, it's either going to be an equity, it's either going to be an expense, and it's either going to be an income. So you have to set up these 5 elements. So let's go. So straight up on our QuickBooks file is now open. So I'm going to cancel this. And as usual, QuickBooks always pops up different windows pops up. So what do? Go to your edit menu. The edit, this at the top here is called the ribbon area, and this is the top menu part. We call them menus. They contain all these commands. You can see an example of a window popping up from nowhere saying Tor. So we have to put a command, a control command, just like the TCL transaction call. So what do? So things like this do not occur. So what do? Let me cancel this. Okay, let's wait a few minutes. I think system is hanging. Okay, so we're going to close this very window. I'm just going to close this. Okay, so this is the QuickBooks environment. And I'm going to show you directly because you're not new to this. So I'm not going to spend time introducing you to these features. So to ignore those different pop-up, come to your edit menu. Go to preference commands. I've told you that you use the preference to manage settings. So you go to preference commands to do that. But I just want to follow our step-by-step so I don't confuse you. What do we need to do is the chart of accounts. So instead, just go to view. Since the pops up is affecting our view, go to view. You will notice that multiple windows is ticked. Change it to one window so that you don't have such issues again. That's the transactional control language here in QuickBooks, the TCL, just like the SQL. All right. So once that is done, our step says what? It says create your company file. We have done that one. Good. It says set up the chart of accounts. Set up the chart of accounts. Okay. So I can come over here for create your company. I can just say good or done. Good. All right, so let's go straight to step 2, which says set up your chart of accounts. How do you set up your chart of accounts? Go to accountant menu, come down, you see chart of accounts. So once you open this is the chart of accounts section. Now you've noticed that even as we ignore those accounts suggested by QuickBooks, there are some accounts that are still popping up over here. Okay, there are some accounts that are still popping up over here. Now, examples of those accounts is this very one we call accumulated depreciation and others. So what do? Because we do not need these accounts. So I'm just going to right click on this, and then I'm going to make it inactive, or I delete the account. So it's left for you. I will advise you make it inactive because there are times you might need that account again. So no need of you creating it. You just go and make it active. So I'll right click and make it inactive. So you can see accumulated depreciation is no more there. Now, what if I want to bring accumulated depreciation back? All I have to do, I'll come below here. I'll go to show me inactive accounts command, and you can see accumulated depreciation. So if I want it back, I'll just remove this X, and accumulated depreciation is now back here live and direct. So that's how to make an account inactive and make it active. So I'm just going to right click again. Accumulated depreciation, we do not need you. Furniture and equipment, we do not need you. So never you keep account tractors, we do not need you. Never you keep accounts you will not use. Always remove them. Make them inactive. Payroll liabilities and opening balance equity, owner's drawing. Okay, owner's equity, payroll expenses. Okay, you can leave these ones. So now how do you create an account? We are going to create accounts for the business. First of all, we are going to create the bank accounts for the business. So I'll come down to accounts. I will say new. I'll come down and select bank out of the list. I say continue because every business like this has a bank account which their finances are being deposited and recorded to. So account name, let's say this is our GT Bank, GTB. Or I bank with Access, so let's just say Access Bank. Okay, Access Bank PLC. So that's for the bank account, Access Bank. So we now know that these are our Access Bank accounts. Now, bank account number, this is where you provide it. This is my bank account number. Then the opening balance, okay? Definitely there should be money in that account. So as of today that you're doing the setup, how much do we have in that account from the statement? So let's say we have the sum of 500,000. The date will be today's date. So we say today's 7th. I say, okay. So you say save and close. So that aspect is done. Setup bank feed is for online banking. You say, no, we don't need it. Now, Access Bank account have been created and the total amounting to what 500,000. That becomes also our opening balance equity. So I'm sure you know this. So we're going to set up another account. Come down, select accounts from the drop down, select new. Income. Let's set up a sales income account, sales account to track all sales. So we'll call this sales. Okay, sales. Income, you can see account type is income. So be very careful with the account type because assuming your account type was bank, Quickbook will recognize sales as bank accounts. So you must be careful. Account type is very important. So sales, you can put any description, any notes. You can just say for all sales, whatever. Once you're done, you say save. So you can see our sales account have also been created. So that's how you create different accounts for that very business. You can create as many accounts as you want to create, okay, which is very, very important. Both your inventory asset account, your cost of goods sold can also come to accounts. We say new. We come to other account types. When you come to other account types, you select cost of goods sold account. You say continue. Then you can, enter accounts like purchases or purchase cost, blah, blah, blah. You say save and close. So you have seen how I did it. Same way you want to set up that has to do with expenses. You come under, you say new. Maybe we have an expense for repairs and maintenance. We select expense, we say continue. Then we say what's the name of the expense. We say repairs and maintenance. Say repairs and maintenance, we say save and close. Okay, so now a company might have different maintenance and different things they will be maintaining. So if there are differences and you want to break it down, you can now use the matching concept where you solve and you use this matching principle I normally teach. For example, let's say we want to divide it into repairs of the generator, repairs of TV set, or different repairs. That one you come under accounts, you say new. You also select expense, you say continue. You say the account name, we say generator repairs or generator maintenance, whatever. We'll say save and new. But before that, sub account of want to sub it under repairs and maintenance. So you can see how I did that. So save and new. We say office, did I say office or vehicle? Okay, vehicle repairs, motor vehicle repairs. So that time to time, we know how much we have spent on these different cost aspects. So same way we'll say sub account of, we say repairs and maintenance, we'll say save and close. So you can see the matching principle now, showing us that for under repairs and maintenance expense, we have generator repairs, vehicle repairs. So you can also do same for your bank accounts. If you're, some companies have a foreign bank accounts also. So you have to also use the matching principle to do that. So these are basic ones, the sales income for all sales, the expenses and others, which are very important. That's how you create different accounts for the business. So that notwithstanding, we are done with set up the chart of accounts. So I say done. So the next thing is to set up the preference. So we'll go there to set up. Now, like I told you, the preference is used to manage settings in Quickbooks. So what are we going to set up in the preference? So to access your preference, you go straight to edit, come down, you see preference. So we're going to set up the currency because at default, the currency is in Naira. So look at this list. You see multiple currency, click on it. Come over here, click on company currency and preference. Select yes, I use more than. QuickBooks will bring this to warn you. Why do you want to change it from dollar? You say, yes, I know, I want to change it. Then come over here, you see how we have used dollar. Change it to view more currencies. Then now select Nigeria from the list. So you can say Nigeria Naira. So once you've done that, make it active. Now you must know that you're now making it the default currency. And each time you use any preference where you say, okay, QuickBooks is expected to do what? To refresh the application. So when I say, okay, QuickBooks is going to refresh this application for me so that the preference I've set up will now be activated. So this is how you deal with those, say, definition language, and that enables you to be able to deal with data in terms of ensuring that there is control. So I can call it transactional control systems also here in the QuickBooks. Okay. Also in QuickBooks, we have what we call the control panel. Now this is asking for password. So I can put a password here. Put a password. So says I should select challenge question. This is this name of all this. Okay, so that's all with issue of that password being set up. So always put a password you always remember. So, we have what we call data integrity. So as an account officer, as an accountant, you must understand that you have to maintain the data integrity. So whatever you're doing here, you must also have that at the back of your mind. Your data, your information must be secured. Now, we have what we call the control panel. If you look above on the screen, you will see a little logo by the side. So we'll call it the control panel, okay? So I'm going to cancel this external stuff. So we'll call it the control panel here at the top, at the extreme edge of the screen. So we'll call it the control panel. So you use it in terms of control. For example, I'm working and I want to go out. I'll just come over here and say minimize, and I minimize. If I'm back, if I want to resize the size, if I want to move it around, I can also move the application around using that. Now, once you have done this, okay, what's the next step? I told you we are still in preference and we have set up the currency. That's good. So another setup we are going to set up quickly is the issue of class feature. Because for this type of business, you must be able to keep track of what you sell. Is important so that at the end of the month, you will know, you can run reports for comparisons to know between product A and product B, which one sells more. So we use what we call the class feature here in QuickBooks. You can also use class feature if it's a construction company. You have to set up a class feature to track the different construction projects or the different construction location. So class is provided in QuickBooks to keep track of either your location, either your different revenue centers, either your the inventories you deal on. So for the type of business, you need it for this type of business. For example, a restaurant or a supermarket might have the grocery section, have the food section and others. So they might want to keep track of it. So at the end of the month, we know between these centers in which one generated more revenue for them. So for that, come to your preference, come to accounting, go over and select company preference. Come down, you see the class tracking for transactions. So you come here and tick it. Assign classes to ticket. We are going to assign to our items. These items that want to track that is of importance to the business. So come and say, okay. So that way we are done setting up that aspect of class feature. Now, if you come to list menu, you can see we now have the class list. So this is important for you to take note of. So the last setup we are going to do is what we call the inventory part for our inventory, because in QuickBooks, inventory part is not there. It's not there. If, for example, I want to add all those inventories, I'll come to list. I'll come to item list. Now, when I go to item list, how do I add an item? I'll come down to item below and say new item. So now when the new item window pops up, you can see inventory part is not here. What we have here is service, non-inventory part, other charge, subtotal. Non-inventory part is for those items that you purchase, but not for resale purpose. They are majorly office supplies. We can purchase Seaway. We can purchase printer. Those ones are non-inventory because we are using them. We are not going to sell them. But what we are concerned about is those items we are getting from our suppliers and that we are reselling. It's important to us as a business. So you must keep track of it. So how do you keep track of that? You must use the inventory part, which is not here. So whatever in QuickBooks you want to use that you don't see, know that it's not enabled. So that's why you go to the edit menu, come to preference. When you come to preference, what do? Scroll down to items and inventory, come to company preference, turn it on here. When you turn it on, you say, yes, want to add this item. So once you have enabled that, now it's not going to enable yet because the window is still open. So we'll go and close this item window. So if you go back now to edit menu, preference, command, and item and inventory, company preference, you tick it, you can see it's selected. And this aspect is for control purpose, inventory control. You want Quickbooks to warn you when the quantity you want to sell exceeds quantity available. And of course, this is important. So you have to go through it and set it up. So once you're done, you say, okay. So same way, Quickbooks is going to refresh the screen. So with that, we are done with that aspect of our preference setup, which is also very important for you as an account officer to also take note of. Then if you look here, you see this icon bar. This is what we call the icon bar. This is my shortcut area. So I normally advise go to your view, take it to the top icon. So the icon goes to the top. So you have a full screen to take care of handle your transactions. So always click on home so you can leave that hash screen. So you get here. Okay. So once you're done with this, we are done with the next step of preference, step 3. Say done. All right, so we're done with step 3. Say done, done. Okay, so that's a good one over there. Now, step 4 says set up the inventory part. We have even done that. We have set up the inventory parts through preference, but we have not set up the inventory itself. And we have not even set up the classes itself. So let me say set up the classes and inventory. So we're going to set up the classes and their inventory. So how do we set up the classes and their inventory? How do we set up the classes and the inventory? So right here on your Quickbooks, you go straight to list, come down to where we have class list. Okay, select class list. Now it brings you this blank window. Look below, always look below. You see class, come and select new. Now you're going to set up all those items as their classes. So we have, we are into wires, it's Good Wires Nigeria Limited, meaning we have 1mm wire red, which is in different category. That's the category 1mm, and 1mm is in different colors. We have red, black, green. Okay, so I'm going to set them up. So first thing I'm going to do, I'm going to set up 1mm wires. That's the general name for the product. So say this is 1mm wires. We'll say okay. Now I'm going to set up all the different colors we have and use the matching concepts to match it under 1mm. So we're going to do that immediately as fast as possible. So what we're going to do now, we'll still come down to class, go straight to new. Under class name, we'll now put the different brands. It could be brands, it could be sizes of those products based on how it's been sold. So for this type of business, they have different colors. Okay. All right. So as I was saying, we are now going to set up the different brands. So based on the descriptions for those different inventories that we are selling. So the company will have different type of wires, but I'm only concerned about these types. So depending on your own setup process, you know what to do for that company. So which is important for you to understand how you can take care of tasks that are coming up from that very aspect. Okay, so what do we do now? So I'm going to come over to class name. I'll say we have 1mm wire red. Wire red. Now I'm going to merge it to the category, which is 1mm wires. So I say next. So I'll also come here and say 1mm wire green. I'll also merge it to the category, which we have 1mm there. So I'll say next. I'll also say we have 1mm wire black. So I'll also come over here and merge it to 1mm And that's it. I'll say, okay, since that's the three categories we have. So you can see for our 1mm wires, 1mm wire black, 1mm wire green, 1mm wire red. So we are done with the class setup from our step here. We are done with the class setup. So the next thing we need to set up is the inventory. That's inventory part, which we have enabled. So I'm going to go back to my Quickbooks. I'm going to close this section. So if you have different items, that's how you set it up. If there are locations, whatever you want to keep track, you set it up. So once I'm done with that, remember we're looking at this trading business called Good Wires Nigeria Limited. So now we'll come over to list, or I go to under company center, you see item and services. So depending on which one you want to use. Now we don't have any item, so we can't look for item. We have not created. So to create an item, come down, click on item, click on new item. When you've clicked on new item, you can see we now have inventory part. Select it. So inventory part is used for those items that you want to keep track of their quantities, you want to keep track of their purchase information, or that you purchase, you want to keep track of both their inventory movement and every information, which mainly are for resale purpose. So come here and put the name of the item. So same way, when I come over here, I'm going to create, I can decide to create it as a group, or I can decide to create them individually. So right here, I can say this is 1mm wires red. So I'm going to say which class does this falls on. This is for 1mm wire red. Okay. So enable unit of measure. Every inventory item has a unit of measure. It could be in pieces, could be in carton, depending on how it's been sold. Some companies sells in dozen and so on. So you have to set it up. So if I click there, I'll come to single unit of measure. So it's left for you. We have the simple and the compound. This is compound. Now the multiple is compound because it's the main, let's say we know that we sell in pieces. Now, what if it's not sold in pieces, it's sold in carton? That becomes a compound, because a compound makes up of the number of, and we can say dozen, 12 dozen makes one, blah, blah. That becomes the compound. But when we are selling in dozen, just like those are single. So same way we can use single. Maybe we sell in coil. Wires are sold in coils. So I'll use single. I'll come here to next. I'm going to select length since it's wires. Okay, or I can select volume. So depending, I think wires should be length. So I say next. Then I'm going to say it's wires and it's in coil. So it's not coil, it's not here. So I'm going to say order. Then I say next. Then I'll put the name. So I say coil. So I say coil. Coil. Then I say finish. I can put an abbreviation if I want. So let me enter that's important. So I can just say coil. Then I say finish. So that's where I've just set up the unit of measure. So always do that. See it here, coils. So you can put a purchase transaction description, you can leave it. So per coil is how much. Let's say we sell per coil of this. We purchase per coil of this at let's say we purchase it at 5,500 per coil. So the cost of goods sold account we created is already linked up here. You can see it, cost of goods sold accounts already linked up there. If you want to use your purchases, whatever way you want to do. The vendor that we purchase this item from, you can also set up the vendor. Maybe we used to purchase it from a company in China. So we'll click on that, select on that drop down, so that we can be able to set up this vendor quickly. That time to time, you'll be raising your purchase order. So this drop down, select add new. When you select add new, it brings this window, you put the name of the vendor. So let's say China Wires Limited. I can just put that there. Say okay. So that's the vendor, which time we'll be raising purchase order when we are out of stock. So it's important. So sales price, you put how much you are selling it. Let's say we're selling it for 8,500. We sell this for 8,500. So that becomes the sales price for this item. So 8,500 per coil. So you can see our markup, you can see our margin. Markup is what? Percentage in cost. You can see our percentage in profit. So you can see all that. So income accounts, you must select an income account. Remember, we created our sales income. So that's what we select. Then inventory asset accounts also created to keep track of the assets of those inventories, which is an asset. So inventory asset accounts will always give us the value. If you want to know the value of asset you have in your warehouse, on the company, and so on, you use to run that report enabled by the inventory asset accounts that have been used to keep track of that. Reorder point, at what point should this product be reordered? let's say 50. Max, let's say 60. So don't run out of stock. How many do we have on hand? Let's say we have 1,000 coils on hand. Or let's say we have 6,000 coils on hand, which automatically is going to total it as 33 million, 3 million in terms of the value. So once you're done with that, what do? Nothing else. You say, okay. So that's how to create an item, okay, that are for resale purpose. So this is it. So you can also format these columns. You can format them coming down here to item. You see here we have customized columns. So whatever you don't want to appear, columns, headings, you can move, you select. For example, if I want class to appear on it, I'm just going to select class and say add. So now class feature is going to appear on the columns. But if I don't want it, I will select what I don't want here. Maybe I don't want on sales order, I'll click remove. So notice sales order will be removed from that template. So you can see now, we now have our class. Sales order was here, it's no more here. Attach is to attach a picture for the item. So you can see those things are all enabled here. So once you're done with it, you'll go and create the other two item brands that we have. So the class feature, we keep track of it, like I told you. So now which ones do we have? We still have 1mm wire black and 1mm wire green. So instead of going to do it again, just come and duplicate this since they are all the same product. So I'll come right click and say duplicate item. So it's just going to bring up same information. My own is to edit, but always remove this DUP that will always come at the top. So I'm going to edit this to 1mm wire black. Okay. I'm also going to change the class to 1mm wire black. Then coil is still there. The price, let's say this one was purchased for 4.5. Okay, and it's still the same vendor. If not, you change the vendor. Let's say we're selling this for 7.5. Sales account and others. Then the minimum, let's just say this one is 40. Next, this one is 50 maximum. How many do we have? Let's say we have 4,000 of this. So that way you can see it makes it faster for you. So what do you do next? You say, okay. So once we say, okay, we've just created 1mm wire black. You can see the track class section too. So same way you come down, we also, since it's the same product, if it's not the same product, you will come to item below, say new, go and enter it. Since it's still the same product, shortcut to make it easier, just right click, duplicate. So you just go and add and try to do what? To edit. So remove this DUP, that always comes up here. So 1mm wire what? This one is 1mm wire green. So say green. Sales class feature to track, we say 1mm wire green. Coil price, and say this one is quite expensive, so we purchase it for 6.5. This very one selling it for 9.5. So you can see our percentage in cost, the markup, and our percentage in profit. That's our margin. So what do we do? Yes, China, yes, or this is from a different vendor. So come down, say add new. Though there are different ways to add your vendor, we still have vendor center, but this is shortcuts. So vendor name, we say Arrow B electronics or manufacturing. Arrow B Industries. So once you're done, you can just say, okay, if you're owing them any money as of today, if you're owing this vendor any money, you put it under opening balance. If we are owing him, but we are not, so just proceed. Don't worry, just for other classes on all aspects. Now, once you're done with that, how much is it sold? Let's say we are selling this for 10,000 naira per coil. Okay, and we purchase it for 7,900. Okay, so you can see our percentage markup in cost, percentage in cost, and percentage in profit. Then same account, cost of goods sold account, keep track of the purchase, transactions, and sales for the income we'll be generating. So you also maintain those information. So our sales income account keep tracks of that for us each time we make sales. So you come down to asset accounts, asset inventory asset. You come to the other points. You can see the minimum, you can see the maximum, you can see that of our on hand. So this will say 50. We'll say this, we say when it gets to 100, don't to be out of stock, we say we have 8,000. So the value will be calculated as 63.2 million. So same way you come to class and put it correctly, green to green items. So once you're done, you cross-check, everything is in order, you say, okay. So this is how to create your items. You can also use the duplicate method for items that are similar, have similar information. So you can just edit them to save you time and stress, because I don't want you to pass through any stress at all. Now, once you're done with that, those setting up those information, what do you do next? What do you do next once you're done setting up those very informations? What are you going to do next? Okay, so going by what we have. Okay, so let's go back to our guide here, what I stated for you. So you can see right here that we are done with step 4, which we have set up the classes. So we say done. We've set up the classes, and we've also set up the inventory parts, that's the inventories. Now, the next step is step 5, which I've listed, handle transactions. So how do we handle transactions? Transactions here can be handled in different ways, depending on the nature of the transaction. It's either you want to use the sales order, if it's for sales, the sales cycle starts with the sales order, invoice, receipt, payment. If it involves purchases, you go and raise that of the purchase order, Then each time you're purchasing from your client on credit, you enter bills. You enter it as bills. Then when you're making payments for it, you pay bills. Use the pay bills feature. So there are a lot of things. You also look into the bank account aspect, where you record your bank, record payments going to your bank, and so on. So same way for that of the sales income, which you have just done, and also the bank accounts, which you're also expecting that at the end of the day, where is the payment for those items going into? Okay, if I come down here to our QuickBooks, okay, you can see that the account we are using is sales income account, to keep track of each of that. But there are situations where you might want to track this directly to your bank account, because when payment is made for this item, automatically, you agree with me, that is going to go straight ahead to your bank account for the payments. But I'll show you how you will do that, okay, to take care of payments when you're receiving payment for these items, okay, since you have already created the bank account. So the next thing is to handle transactions. So go to your home, click on home from the icon bar to go to your home. So let's say I'm looking at the problem we have. This takes us to the problem. We said that there's a scenario here, a situation, a customer pays for an item, meaning that sales took place. So we are going to make sales for this customer. So since we want to make sales, we are going to use the invoice. So you come to your customer center, you see here we have our create invoice. Estimate is also a good one, quotation. The customer can call you that, please, I want to know how much for so this is. You can send a quotation. Like I said, you can also use your sales order. So a customer calls us that they want to purchase a product. What do you do first of all? You can go to your sales order and raise the sales order. Now, I will tell you why sales order is important, because in that scenario she shared with us, what's happened there is because they did not use sales order to raise the sales. Okay, if they have used the sales order is for confirmation purpose, they would have checked their warehouse to be sure, because the sales order is to be sent to the customer, so the customer can go through, and you yourself, you have to go and check too. So it will have avoided that issue that arose. Okay, but nevertheless, you would have known if you had that product available or not. But nevertheless, I will do it the way you said you did it, using invoice direct, and why you face that problem, how to handle it. So I'm not going to use the sales order, but normally sales cycle starts with raising the sales order. Is better for confirmation purpose. So I'm going to come back to customer center. I'll go to create invoice. So let's assume that what the customer purchased was 1 mm wires, black. So let's go straight to create invoice. This is the invoice. You can format your invoice. Come to formatting. Come down to customize data layouts. Make copy. So whatever information you don't want to appear, you can do that. If I want to change the name from invoice, so maybe I want to call it sales invoice, I will just come here. Under header section, we have column section. Header section, I will change the default title to what? Sales invoice. Can just say customers sales invoice. I can do that and say okay. Then for the columns, whatever I don't want to appear, just untick it, and that's all. Just be unticking them, whatever I don't want. like this FOB issue from the header. There's something called FOB. We don't need it. I can just untick it because this is Nigeria. I can untick this information. Then I say, okay. So you can see it's now called customer sales invoice. So depending on how you want to customize, it allows you to do that. FOB have been removed from here. If you don't want a rep to appear, same way you go there and untick it. So now who is this customer that wants to purchase? You must set up the customer. Okay. So before every transaction is handled, always set up the customer. So how do you set up your customer? You go to your customer center here. You come to customer center so you can be able to do that. So let's go there. So say customer center, I'll click on customer center. It's going to open the customer information window, which will contain for per customers. So I'll come over here to new. So we have just been able to set up Mr. Babatunde Fashola as a new customer. Okay. Now, if Mr. Babatunde Fashola happens to be an old customer who is owing us some amounts of money, that's why we have opening balance. So here you put how much he's owing us as at this migration date, as at today's date. You put it here and put the date here, which must be today's date, as at today, 7th February 2023. How much is Mr. Babatunde Fashola owing us? You put it under opening balance. If he was to be a vendor and we are owing a vendor, vendors has their own, which will always be recognized by minus sign. So all these things are important, and it falls on the chart of accounts, which I told you it is the chart of account that recognizes how each transactions you are entering in QuickBooks is what being done. Okay, so the customer have just been entered, so we can just put other information for this customer. You can click OK. So once you do that, we have just set up Babatunde. Can drag this Mr. Babatunde as a customer. All show all transactions instead. Filter by all. This is Kai. Depending on the date, if you want to view it for so week, so date, so month, you always customize that aspect. So let's go. So once you're done setting up the customer information, you say cancel this. So you go back to your sales invoice. So now for customer, you capture, you click on that drop and select the button, the Fashola is a customer. So which of the item is it purchasing? You come down, item code. You say which item? You say it's purchasing A1mm wire black. Class automatically pops up. Description, you can put it there. Doing sales of 1mm wire black. Price for each or quantity will determine the price for each is already there. So what's the quantity? It says purchasing 500 quantity. Now VAT is not yet added. So I would have showed you how to set up VAT, because for this type of business, VAT is important. So how do you do that for VAT? Go to edit menu, come down to preference. You can see edit is now has so many options. Come to preference. Go to sales tax, company preference. Do you charge sales tax? Say yes. You know, then come down to add sales tax item. Sales tax item, sales tax name, VAT. Class will be tax now, VAT, but leave that. Description, that's value added tax in Nigeria. Value added tax. The percentage is 7.5% here in my country. Tax agency, the vendor that collects it is FIRS. So you know the tax promax. So you just put FIRS. That's shortcut. So you're going to set up all those agencies. If it was pension, you know, it's remitted to the pension fund administrator, but pension have nothing to do here. Pension is strictly for the payroll aspect. It has nothing to do here. So our focus is on that, which can also set up withholding too. So that's ones who things you need to know how to do and how to also remit and keep your VAT in terms of filings. Okay, so we now have our VAT set up already. When do you pay the sales tax monthly? And so on. So I'll show you how to manage those ones. So that's all for the VAT. So say okay. Say okay. So same way now, preference is going to refresh the whole screen. Okay, so the whole screen is being refreshed. Okay, so to leave this hash screen, come over here at the top, click home. So you go home. So we are home now. So we will notice under vendor center, we now have a new feature called manage sales tax, which is by the side here. So you'll be using this each time you want to compute your sales tax to remit to your to the administrator, okay, which we know is FIRS, that's the tax agency. I've already set them up. You will set them up, all those tax agencies, administrators are under vendor center. So look at that when you want to pay the tax, remit it. We'll look at how you can do that later. So now let's go and sell that product now. So we'll go to customer. We have our customer already added. So to handle that transaction, we'll come to create invoice. Who is the customer? We'll say Babatunde. What is he purchasing? We say black, 1 wire black. Sorry. We say 1 wire black. How many quantity of it? Or we can say it's purchasing green, depending on what he's purchasing. So now you can see quantity pops up this way. So you can use different templates. We have different templates which you can adjust to based on if you want to format based on templates. You can come to formatting, manage templates to select different kind of templates you want to use for your invoice. This is an example of a product invoice. So how many quantity of this product is he purchasing? We say he's purchasing 1,000. We say bean sales for 1 wire black. Black color. Unit measurements already in coil. You can see also that for this 1,000 coil, it is going to pay us 10 million. Now, you can also see below, we have our tax VAT. So depending if it was to be a vendor, you select withholding tax. That's if you've set it up. But this is a customer, so VAT is inclusive. So you can see the VAT 750, everything added at 7.5%. You can see how much this customer is to pay us. But now, you can also notice that under class, we have 1 green, and it does not tally with us. What is he purchasing? We say it's purchasing 1 black. So the mistake is from here. So go and select it, 1 black. So automatically it's going to tally with the class. 1 black, also tracked with 1 black. You can always adjust these things to see what you're doing. So he purchased 1 black, 10 million naira. Terms, if there's any terms applied, if he's purchasing on credit, you can indicate it here. Or if it's a terms that has to do with a new term, like 180 days is to make payments in 6 months' time, you can add new term. Put the new terms. You can say, okay, in 180 days, then 180 days net. So say 180 days. Say, okay, any discount percentage given if it's paid in so day. These are set up trading firms do. You can also set them up here. Okay, discount percentage is given 2% if he pays on time. Discount if paid within, let's say if paid within 30 days, is given a 10% discount. So yeah, a 10% discount. So you can also do all this, okay, to ensure that everything is done. So that's just for that, depending on what you're doing. But this client is not, I'm going to change this. This client is not purchasing on credit. So there's no need for all this. So rep, the representative that sold it, the staff, the salesperson, you can add the salesperson name. Let's say we have Emanuela. So I'll just say Emanuela. All these lists of reps, can get them from item list. And just say Emanuela. And just say, it's also an employee, of course. Say, okay. So Emanuela. So Emanuela, we'll use her initial E for Emanuela. So she's one that made the sales. So you can also do that under list. You can add your price level list. if each goods product, maybe we sell at different prices to different customers. We have supermarket price, we have wholesale price, we have retail price, and so on. You come and set them up here first. We have different billing rates. We have different currency lists. We have class lists. We have that item list, fixed asset list. We have also order names list, those salespersons list, and customers and vendor list. You have all sales rep list. Now, Emanuela have already been added to sales rep. Otherwise, would have gone there and do all that. So this is just how you're going to do the setup. But now we are concerned about the scenario where we said that this customer, let me go to the question. The question says that how do I handle a transaction or a situation where a customer pays for an item and what was delivered to him was not up to the amount he paid? Then in a few weeks' time, the item becomes available, which I intended to send the balance to him. So how do I go about that? Now, this is it. This is what you're going to do. Let's say he said he wants to purchase 1,000 quantity, right? Good. Meanwhile, what he sent to us, let's say he wanted to purchase 2,000 quantity of 1mm wire black, but he sent us 20, let's say he sent us 20 million naira. He has already paid 20 million naira, meaning we're supposed to go and receive payment from him of 20 million. Now we now check our stock. We've noticed that what we have is not up to 2,000 quantity. We only have 1,000. We can only send 1,000 to him for this very product. So how do we then balance up? Now, let's first of all check how many quantity do we have for this product, first of all, so that I will show you how to also do the aspect of inventory adjustment, to adjust your inventory in terms of when there is a new quantity arrive for your inventory. So let's check 1mm wire. Let's go to our item first. 1mm wire black. Let me expand this name. 1mm wire black, we have 4,000. Quantity on hand is 4,000. Okay. Now let's go back. Let's say this man called Babatunde Fashola wanted to buy 5,000 quantity. He has already paid us. And you know that if we are doing 5,000, it's going to be 50 million at 10,000 naira each. It's going to be 50 million. Now, Quickbooks automatically, we have already told him that, sir, we sell each black coil per coil at 10,000 naira. That is, since you need 5,000, you're going to make payment of 50 million. He went ahead and made the payment. Now, we'll record it. Now, time to now invoice him. We notice what? That time to send in the invoice, the record, the goods. We notice that what we have is not up to. Quickbooks is even telling us they don't have up to that quantity of 5,000 coil. What you have on hand is 4,000. So what do we do now? What you're going to do, since you've already received that amount, Quickbooks Control have already told us, based on what you've set up, we are going to send in what we have. Because we can't say what we don't have. So we'll send him the 4,000 that we have, which is 40 million. What 40 million? Meaning that we are still owing him another 1,000 quantity. What's at 1 million, 10 million naira. And that we are still owing him another 1,000 quantity, what at 10 million naira. So we are going to come here. VAT is inclusive already. So let me just assume that we don't want to use any VAT on this. Okay. So let me just assume. So I'll come down to the customer tax code. Let me put non-taxable, because let me just do it direct so you understand how to do this. Okay, so now I've removed the VAT first. I know VAT is inclusive. I just want to do it direct so you understand how to make those balance payments. So now we are supposed to send him 5,000 quantity. We have only 4. And he has already made payment of 50 million, meaning that what we are sending to him is 40 million and we must send him his balance of 10 million. So that notwithstanding, we'll come and save this. Say save and close. It says the tax field cannot be blank, even for non-taxable customers and sales which have no taxable items. So non-taxable item will be correct for this district. Okay, sorry. So let's just create one for non-taxable. Okay. For the sales tax, those items that are non-taxable. Okay, we know that this is non-taxable. Okay, so we'll say save and close. So this one is just for spelling. So just ignore all. All right, so we have just saved that transaction for that very customer called Mr. Babatunde Fashola. So you can see I now went to the sales receipt. Now the sales receipt is where payment for an item was paid immediately, and the item was also delivered accordingly. You just use sales receipt to do that directly. But since we know that we don't have up to that, use the invoice so that it will then become what we call open invoice. Now, if you check on our account balance section, you notice that it's now recorded as account receivables, which is wrong. This is just showing that payment have not been made. So let's go and record payment received from that customer. You know, the goods we sent is 40 million, meaning which the customer sends us 50. So I'll go to receive payment. Receive from who? Babatunde Fashola. How much? I say 50 million as of today's date. Now, he paid us 50 million. You know, I got here. I went to click on, so each time you want to receive payment from a customer makes payment, use receive payment. Click under customer center, click receive payment. You see this box. Who is this customer? Selecting Fashola Babatunde. Now, how much did he pay us? He paid us 50 million. Now, if you notice, a register opens telling us that we already made sales of worth 40 million to Babatunde. You can click on this, it will take you to the invoice. So it means that he paid an excess amount of 50 million against the sales he made that was delivered to him worth 40 million. So this will now become what we call the balance. Is now going to become what we call a credit balance in Quickbooks, indicating that the customer paid in excess of what was sold to him. So what I'm going to do, or you're going to do, come and tick on this sales that was made to the customer. So when you tick on it, you notice over here we have a section called overpayment, telling us that since he paid in excess of this amount, there is an overpayment worth 10 million naira. In that he paid 50 million against 40 million, which brings this overpayment of 10 million naira. So you are to send in goods later on when you now have the available, you have new quantity arrived. You're now going to send to him those products worth 10 million naira, which is 1,000 quantity of the black 1 mm wires. If you want to refund this amount to him, you're just going to tick refund the amount. So you know that you're sending him that payment to him from your bank account. But since he says, no, don't refund, when you are in stock, send the product to balance up, leave it and leave the credit to be used later. So that later on, when you're sending the remaining products, it will be sent to balance up this credit. So leave it and leave the credit to be used later. If you're refunding the money to him, the 10 million remaining, you use refund. But if you're not, leave the credit to be used later. So you know that the company is now owing him. It becomes a liability to us. And you know that's unearned revenue because he's like paying us in advance. So it's an unearned. So it's not even going to be recorded. That 10 million is not going to be recorded as sales. We don't record that. You record those invoices so fast, the ones that was delivered to him. But this very one of 10 million is an unearned. So we'll not record it yet because we have not yet delivered. So it's not going to record it as sales, but instead we're going to recognize it knowing that it's a liability to us. Now, what do we do here? So I'm just going to say save and close. So it's telling us that there's an overpayment. We say, yes, let it remain in the customer's account. We say, okay. So we have just received payments. So that's how to receive payments in QuickBooks. Now, if you go to the customer center, you notice that for Babashola's history, you see minus 10 million. This means company is owing him 10 million. Company is owing him what? 10 million. So minus shows you we are owing. If there was no minus, no negative, it means they are owing us. No, on its register, there is an error, something we missed out, which is payments, showing us accounts, undeposited funds. That's wrong. We have a bank account. We said we used to receive the payments. So if we go to our accountant section, chart of accounts, you notice that in our Access Bank, you see the opening balance of 5 million and 500,000 that is there. Whereas we received 50 million plus. Why is it in undeposited funds? Why is it not in our Access Bank? That's another setup you must do. Go to edit, come to preference, go to payments, come to company preference. When you come there, undeposited funds as a default deposit account, say no. We don't want it to be our default. We have a bank account for crying out loud. So we say, okay. So let it refresh. So once it refresh, undeposited account, go to home now. It's not going to be the default anymore. Now, what you're now going to do is this. We'll go and edit that transaction, meaning that QuickBooks gives you the ability to edit transactions. So you will go and edit that transaction and make sure you capture the bank account where the payment came into and not undeposited funds. How do we do it? Go to the customer center. Come to his register, click on that payment he made. You can see he made payment. Click on the payment. Now you see where we have deposit to. Where was this money deposited to? After reference, you can put reference number. We have deposit to. Change it from undeposited, put Access Bank. Then you say save and close. You say, yes, I want to record this new update. So automatically you can see the payment is now made to Access Bank. So here even shows you, we invoiced 40 million worth of product and it made payment worth 50 million. So now if you go to our chart of accounts, you will notice our bank account is now 50,500,000. Same way, if you want to view this in your bank for reconciliation purpose, go straight to banking menu, come down to where we have use register. You will select the bank. If you have up to 20 bank accounts, this is where you select it. So say our Access Bank, we want to view the whole transaction history for Access. You can see it here. Opening balance 500,000 as at 2nd July. And for this customer, Babatunde Fashola, it made payment of 50. So you can see our closing balance. So this is how you can also do your reconciliation from your reconciliation end with your bank statement, when you want to reconcile, see the reconcile here. Okay, that's where you click on that. So that's just for that. We're not doing any reconciliation. So you can see, like I said, the register shows you the balance, okay, the closing balance actions in your bank account. And this is how you can also be able to reconcile by clicking and selecting reconcile, so which I expect you to be with your bank statement. So you enter the balance in your statement, ending balance in your statement against the opening balance here in this Access Bank account. And at the end of the day, if there's a discrepancy and all that, is going to bring it up for you to see. Okay, so same way you can go to the snapshot area. And I've told you the snapshot gives you a quick access or quick information or summary about the business. So if you come to the customer section, you can adjust a customer. This for Mr. Babatunde Fashola. We don't have any other customer we have added. Of course, you can add any amount of customer you want to add. So you can see right here, the total sales to him is what? Under sales summary, 40,000. Meaning that we have an open credit balance of what? 10 million. Meaning we are yet to supply that to him against the payments to us. Okay, so what do we do? What do we do? What do we do? Now, if you go and check the stock, the available inventory under list, item list, 1 mm wire black. What's it showing you? It's telling you that total quantity on hand is 0. Now, if you don't want to come this way, you can go to your reports. That's why reports are there. You can come to item, inventory reports. Check your inventory stock status by item. If I check that report, I can also find out here that for 1 mm wire black, 1 mm wire black, okay, you'll notice what? That on hand is 0. 0. We still have for green 8,000, we still have for red, but for black is 0, meaning that is the reason why we're not able to give him the complete 5,000 he needed, because we had only 4,000. If you check at the end, you see sales per week. Sales for this week, we said sales of 4,000 to him. Same way happens. You can customize and you can say you want to view for all, you want to view for last week, and so on. So this date section is here. You want to view the history of whatever. You want to use the custom feature from so date to so date. You can also do that. But what we are looking at is just the inventory stock status for all the items we sell. You can see that it's 0 for the wire black. Same way you go to reports, you want to view inventory valuation. I told you the valuation summary can be viewed. The valuation summary can be viewed. You can see it here. The inventory items on hand is still 0. You can see all information, the average cost, and other information for available products. Based on sales that have been made, you can also view the profit or loss, which is under company and financial. If you go there, profit or loss, standard or detail, you can see our sales is 40,000, 40 million, sorry. Cost of goods sold, 18. You can see no expenses recorded. So our net income is 22 million when the cost of goods sold was deducted, and it's accurate. Same way, if you go to say you want to view that of the statement of financial position, balance sheet for company and financial, if you come down to balance sheet, standard or detail with any of them, you'll also be able to view that information. You can see it displayed here. Okay, now we have the collapse view and the expand view. So you can always move to the expand or the collapse. So you can see current assets, our bank account, 500,000. You can see all that and our closing every information, both on equity part and everything balances. So this is awesome. This is awesome. So you need to just go through this. You can see our, of course, you can see here that our total liabilities and equity is how much? Having 154,000, 136,700. Okay, so let's check our total assets. It's also 136,700, meaning that this statement is correct. Same way you can view that of the cash flow. You can also decide to view that of the cash flow, which is also important. So same way from the company and financial, we come down to statement of cash flows. You also see our cash flow statements here. If it's trial balance, which I always tell you to go to, come down to company and then come to tax, accountant and tax, you see our trial balance is here. So now it's not showing any information because the date is in last month. So always look at your date. We are talking about today or all, or today. You can see it here. Our trial balance is also balanced. 164,700, 164,700, debit, credit. So you can see that we are good to go. But now we were out of stock. So how do we, let's say we received new high inventories from our vendor. You know, of course, you go and use your purchase order. So let's work on the inventory aspect properly. Now we'll raise a purchase order. We need 1 mm black from our vendor. So we'll go and use the purchase order. First of all, who is supplying 1 mm black to us? Let's check that item. 1 mm black, okay. It is supplied by China Wires Limited. So how do you record when you receive inventory? Raise a purchase order to who, which vendor? Yeah, you select the vendor, China Wires. So say China Wires Limited. Okay, you put the address, they are going to drop it. By that time, you're set up now, all this kind of information. So now, item. Being purchase made for 1 mm black wires from China Wires. Now, How many do we need? Let's say we want them to send us 3,000. Okay, so 3,000 is going to cost us 13.5 million. So we are going to make this payment to them. Okay, but now we have raised the purchase order. So let's send it to them. So say save and close. So I've just raised a purchase order to them that we want so product to be sent to us. So let's say they have received the purchase order. What do we then do? Let's go to our inventory items. It's still 0, but I've not recorded that we have received the inventory. So how do you receive inventory from your vendor when you've sent a purchase order? If you click on that purchase order, you can use this form section, call it forms, to go to the previous one. This was the previous one, that arrow. This was the previous one we raised. Okay, so the previous one we raised. Now, we are done with this, which we have already done what we have already saved this already. Okay, so now we said that we have received this. How do we record it? We'll come to receive inventory, click on it. Now it shows you with bill. Is it with credit or not credit? So let's say we receive with bill. So let's just click on it. Okay, good. Now you can see here telling us the vendor, first of all, in the bill. We say China Warehouse Limited. Now it told us that there's a purchase order that exists for this vendor. So the item we want to receive, the inventory, are we receiving it against that order? We say yes. Where is the order? Is this one? It will now bring it up. We have to select it. That we are now receiving this inventory from China Warehouse. We say okay. So that means we'll be deducted the sum of how much? 13.5 million for this inventory, which we are receiving. So what are we going to do? We're going to come below here and say save and close. So if you go and check now, you'll notice that we have received that inventory. So if we come down, you can see amount, though we have not paid him yet. We have not paid him. That's why accounts payable is saying 13.5 million. Accounts payable, meaning that we are owing that vendor. Let's go and check the item list. So now if you go to the item, you'll notice what? Total quantity on hand is now what? 3,000 quantity, not 0 anymore. If you go to your report now, let's go to our reports, inventory reports, inventory stock status by item. It was 0 now. Now it's what? 3,000, meaning that we have received that inventory. Same way you can run your inventory reports by vendor. By vendor. You can see we received from China Wires 3,000 is there. It's there. So let's go back to the home. Now, accounts payable. If we go to our chart of accounts, accounts payable, we have not paid. We have received that inventory on credit. That's bill. Bill means credits. We use with bill. So account payable keeps track that we're owing 13,500. You can open the account. You see it, China Wares Limited, 13,500 was billed. So how do we make that payment now? This is what you're going to do. Each time you have such kind of transaction you receive on credit, you come, you say enter bills. We even have enter bills against inventory. Okay, so say China Warehouse Limited. But now we're not going to use this. So what you're going to do is cancel. We are going to come and say pay bills. We already know that we have an outstanding bill that we are owing China Limited for the item they delivered to us. So how do we pay them? Because if we are paying them, that means our bank balance. If we go to banking, use register, our access bank balance is showing us 5,500. That means 5,500 is going to reduce. You know now, when you're purchasing an item, inventory will increase, cash will reduce. Same way it happens here. So let's do that. So we want to pay him for what he delivered. That use register is also called check register on the banking center. So if you want to use the menu, I told you use the menu or you use the centers. How do we pay China Warehouse Limited? Come to pay bills. Click on it. No need of entering it. That's already been entered. When you open pay bills, it will show all the bills you're owing or your vendors. For now, then you'll be the one to select which one you want to pay. We want to pay China wires, so tick it. When we tick it, we want to pay China wires, so I'm going to select China wires. You have seen now amounts to pay now appear. If you don't select it, it will not work. It's just there's no amount to pay. In amount to pay column, there's no amount to pay now. Assuming he was the one owing us, it will be under credit used. You see the open credits he's owing us. But now, no, we're owing him. So you tick it. It now shows you amount we have to pay him, 13,500. So now come down. So which account do you want to pay him from? You select as many accounts you have. Which of them do you use for payment? We say we are paying him from our Access Bank. You select it. Meaning that Access Bank was having 50 million, 500,000. So therefore, it means that at this point, that there will be a deduction. 50 million, 500,000, remove 13 million, 500,000 from it. We'll be left with what? 37,000. So automatically, the computerized system have deducted it already. If there was a discount given to us, you set it here, the discount he gave to us. Let's say he gave us discount of 500, 5,000 or 15,000. You come here, set discount. You put the amount of discounts here. You can say, okay, he gave us 10,000 naira discounts or 100,000 naira discounts. That means you've already created an account called discount account to keep track of all discounts, both the discounts you give, discount going and coming. Okay, so it's very important for you. So you can also have classes for your discounts. This discount was given for MMWire. You put it, you create discount accounts also to track it. So if you're putting that, that means you're not going to pay him 13,500. If you were issued 100,000 discounts, you now be that we are now paying 13,400. So everything works with the chart of account setup. And it's the chart of account setup that does every link up perfectly for you. So what you're going to do now is this. You come scroll down. There was no discount given. Credit, if he was owing us already, you can set it here immediately. You can put the credit. But now there's no credit. He's not owing us. If not, it would have popped up here. If there was discount, we'll put it. If it's credit, we'll put it. It's not owing us. Maybe we paid him before SS. He's not. Method of payment. You can put that. You can set up your method already. Now, we want to record this. You say pay bills. So that's how to pay bill. So our bill have been paid. You can see the summary, payment summary. Okay, which you can print later. Say done. So now if you check our bank balance, account payable is now 0. Bank balance under chart of accounts. Our bank balance, Access Bank is now 37,000. Account payable is now 0. Inventory assets have increased because of the new inventory received. Now, if you go to our banking, use register, you also see that transaction captured. So what do you notice? We are still in Fashola deal, I know, but now we made payment of 13,500. We purchased 1mm black wire for 13,500. So you can see our closing balance. Let me close this, sorry. We are in the wrong place where we went and opened inventory asset accounts. I'm talking about banking. So let's go home, go to your bank, click use register or check register center. You can see our closing balance is 37,000, showing us our opening balance, the previous sales we received, China wares payment to China wares 13,500, balance is 37. So now let's take the last issue on that scenario. So this is just how to handle receiving inventory. Another way you can receive inventory, there are two ways, either this way, or you go to vendors, come to inventory activities. You see we have adjust quantity / value on hand. If you did physical counts, you use physical inventory worksheets. Maybe you want to count all the inventory you have in the warehouse. You run this worksheet, then you count to see that you put the physical count will now appear here. If you've added the physical count, totally what you have. But since the second way, like I said, come and adjust each inventory. Use the adjustment method. Now you come here, what do you want to adjust? You can adjust either you're adjusting quantity or value. Maybe the price have changed and you want to change prices for the inventory. You have to come to vendors, inventory activities, select adjust quantity or inventory or value of inventory on hand. Adjustment type, you indicate if it is value or quantity. If it's the both of them, you do it. Which of the item? We say in black, you put the quantity. We had 3,000 before. We are now, what did we now receive just now? let's say we are receiving 34. It means that what we'll now have, inventory difference based on what we are actually receiving. Okay, we said, let's just say 34 here. It means that we had quantity on hand 3,000. Quantity difference is what we added now. We added 34. It means what we'll now have if we save will be what? 3,034. Okay, but this is not good. As an accountant, you use proper circle. So you manage your accounting circle properly. So always use the purchase order. Unless you want to, if it was not involved with a particular vendor, then you can use that adjustment pattern and give your reason for that. So now we are still having an outstanding fee. We are owing Babatunde of 10 million. Now that we have the inventory, what do we need to do? We need to send him his goods to complete his payment. Now, remember I told you that you don't need to worry because since we sent him that payment, Quickbooks keep record that he made, that means he made an overpayment and of excess of what, 10 million. That means that invoice is still what we call an open invoice. It's not yet closed. So since you want to send him a new inventory to complete that amount, just go to the customer center, come and select his own name. His details will appear here on the register. Look at that invoice, that very invoice. Open that invoice because it's still open, so open it. When you've opened it, come and adjust what you want to send to him. It will now be 5,000. Or if you don't want to do it that way, you can leave the previous 4 that was there. Come below. Say, which quantity is that? Which item? Say black. How many are we sending to him? We're sending him 1,000. Remember, he's owing us, and we are owing him, sorry. So being balance for outstanding goods. Now, price for each. Is it black that we said is 10? Let's check our black. That means it's even supposed to be green. Let me see. Which one is sold at 10,000 each? Let's see. Okay, so let's put a price. Now, price was 10,000 each, so say 10. Sorry, yeah, 10,000. So you can see that tallies how much it tallies it to be. That's 15. It tallies it to be that 15. Remember, for this customer, what did we say? He made payment before of 50 million. So now we have to send him the complete product. So now the total is now 50. So we'll say save and close. Now, when we click save and close, it says that there are payments applied to this invoice. That changing the amount will cause the payment to be applied differently. Do you want to change it now? We say yes, we want. We say replace all. Now, when we say replace all, wonderful. We are now given an information that is very important to us. QuickBooks is now telling us that there is an available credit. Remember, he paid in excess. There's an available credit of 10 million. That this customer has an available credit that can be applied to this. Will you like to apply it? Yes, that is balance of 10 million. We are now sending him the complete goods that will complete that payment. So we'll say yes. So once you say yes, it will bring this for you, showing you how much we are owing him, 10 million. Remember, it was showing minus, so automatically it will cancel out. Now we have to select it. You can see it automatically selects it because it was 10 million we are sending now, and it matches with the 10 million. If what we are sending now was 8 million, trust me, what you see here will be 2 million remaining as his credit. But it already applies that yes, 10 million to 10 million. So I'll just say done. And that's all. Paid. That's all. So if you come to Babatunde's register now on the customer information, no more minus 10,000 and minus 10 million. Payments is even, you can see invoice goods sent was 50 million. Payment 50 million. Balance completed, everything entered perfectly. We are not owing him anything again. So ladies and gentlemen, from here, you can decide to run a quick report. You can sort out by different means. You can filter by different means. You can filter by months, by year, and so on to see information for your customers. You can add more customers, can handle more customers' transactions, can manage transactions. You can run reports for this customer. You can view this as a report. So you'll be able to see all of this information. And you know the three statements that are important. You can come to your customers and receivables. You can check their balance summary for customers, which I should have showed you, where you see how much you're owing a customer as well, or what they're owing you. So if you come to our accountant center, to the chart of accounts, you'll also be able to view lots of information from your chart of accounts. Okay, you'll see every information displayed there for you and all balances. Okay, so ladies and gentlemen, let's go to our profit or loss. Let's check our profit or loss for this business called Goodwires Nigeria Limited. So you can see the credit, debit section and the balance. You can see right here. So are we making a profit? Of course we are. You can see sales 50. Okay, you can see this for profit or loss detail, but check that of the you can see it here. Our sales, total sales, you can see our cost of goods sold. And so our gross profit is 27,500, and that's our net income. Same way, you can go to the statement of financial position and that of the cash flow. So thank you for staying tuned with us. Don't forget the snapshot area where you can go and get insight. Okay, and from the company section, you can see account receivable 0, account payable 0, and all that 0. The tax, we did not apply it, but I've showed you how to apply that of the VAT for goods that are not exempted. Customers who owe you money, none. All information there. You can go to your customer, your accountant's office is here. We'll call it accountant center. So from accountant center, that's your office. So you can see your office is here for you. You can see a reconciled balance, opening, and so on, whatever you want to do. I told you about general journal entries. Maybe you purchase an equipment, blah, 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 by cash. You come and click on your accountant office. It will take you straight to make general journal entries on debit, credit, where you debit bank, you credit, where you credit the giver, you debit the receiver. So you're going to make a purchase from our bank account. You know that, or we paid our bank, maybe we took a loan. It's going to be loan account and that of bank. So, definitely loan account to be receiving, bank account to be giving. So you select the two accounts, you put the amounts in the debit credit column, you save. So all those informations are gotten also from your accountant office, which is called the accountant center. Can handle different kinds of transactions, can also use what we call memorized reports. You set up all those reports you'll be needing to work with, like the adjusted trial balance and other reports. Can see our adjusted trial balance so far. It's here, and our adjusted trial balance, our trial balance is balanced. So ladies and gentlemen, my name is Williams, and I'm glad you have learned this from this very Miramar Consulting with me together. And I want you to put this on practice. Of course, you can always comment on your reports for audit purpose. We have also the audit trail, which is also important for you to run. Man, there are a lot of things you'll be needing. We have the to-do list, which you can also use. There are lots of reports aspects, a lot of things, contributed reports, a lot of them, and I just want you to check out all these. And one way to understand this, develop passion for it, same passion that made you to study accounting. So if you come to accountant and taxes, how do you view your audit trail? Accountant and taxes, come to audit trail. You see all informations. Maybe you're an auditor, you want to audit. This must be of interest to you. So Quickbooks provides this audit trail for you to view all of them, to check in case of where fraud might occur in the business. Your aspect where you have to go into is the audit trail. Okay, so from reports, go to accountant and tax, come to audit trail. It helps you hasten internal controls and other procedures you might be bringing into the table, which is very important. Either your budgeting aspect can also be taken care of. Okay, we have the budget aspect, which is expected that as an accountant, you must set up your budget, and it's part of what you must do. Okay, we also have the set closing date. You can set a closing date to close each books of accounts, can manage your fixed asset, a lot of things you can also do over here. So ladies and gentlemen, from company, if you want to use the budget, go to company center, come down to planning and budgeting. You set up your budget. okay, for the business. So thank you very much once again. I leave you here in the audit trail, and I leave you to practice this. Stay tuned with our trainings. We have our YouTube channel at Williams Miracle, which you're expected to go and subscribe to that channel so you get in touch with lots and lots of our value-added content. So thank you once again. My name is Williams, and have a nice day. Thank you.